This week I made two moves that look crazy on the surface. I added to a drone stock that's down 19%, and then I added to another drone stock that's down 14%. And then I ran out of money. All in on drones right now, zero cash left, and the market is looking at me like I've completely lost my mind. But here's the thing about real conviction. It's not about being right all the time, it's about being willing to act when you see something the market hasn't priced yet. And this week, I saw something big enough to bet everything on it. Let me walk you through what actually happened because the order matters. It's not two random drone picks. It's a thesis that got deeper and more connected than I even realized. The portfolio is sitting at around $89,000. We're down 9% from where we started. The market looks red, but the numbers are quieter than the story behind them. My original drone thesis started with UMAC. That's a vertically integrated drone component manufacturer, NDAA compliant. They make parts that go into military systems. When I first looked at the Pentagon's drone spending push, UMAC was my entry point, a manufacturer that benefits from increased production. That made sense to me, but then I started digging deeper into the other side of the drone thesis, the robotics side. The AI-driven systems that the Pentagon is betting billions on, and I found JFB merging with XTEND, a deal worth $1.5 billion, selected for the Pentagon's $1 billion drone dominance program, with strategic investors lined up to fund it. That got my attention, and then this week, when the market panicked and knocked both stocks down, I looked deeper at the investor list in the XTEND deal. And I saw something that connected the dots. UMAC is listed as a strategic investor in the JFB-XTEND merger, not just a financial investor, a strategic partner, a drone component manufacturer betting on the robotics platform that's about to eat into Pentagon procurement. That's when I realized I was undersized on this thesis. This isn't just two drone stocks I like, this is two complementary plays on the exact same wave. UMAC as the component supplier, XTEND as the robotics platform. And they're connected. UMAC is already in the deal, so this week I added 300 shares of UMAC at $19.10. And then I took every remaining dollar of cash we had and went all in on JFB, 88 more shares at $4.67, $2 left in the account, zero meaningful cash cushion. I wanted to be on record as someone who believed this thesis badly enough to bet everything on it, not just have a position. So let me explain why. Because if you're watching this, you should understand why I'd go all in on a micro cap when it's bleeding out instead of waiting for a safer entry. The truth is the United States is in a real conflict with Iran, not a declared war but a real one, and we've been using up our munitions faster than anyone expected. The numbers being thrown around are that we're burning through about a third of our missile stockpile, and rebuilding that takes years. You can't call the factory and say we need 10,000 more Tomahawks by next Tuesday. It doesn't work that way. So the Pentagon faced a choice. Keep using expensive missiles that take years to replace, or pivot to something cheaper and faster to make. They pivoted to drones. But they didn't just wake up this week and decide that, they decided it months ago, and they built a whole budget around it. Earlier this year, the Trump administration submitted a 2027 defense budget that included what the Pentagon is literally calling the largest investment in drone warfare in U.S. history, not in the last decade, ever. They want to triple drone spending to $74 billion. They want to spend over $30 billion just rebuilding the munitions stockpile we burned through in Iran. The Tomahawk missile orders jumped from 55 missiles to 785 in a single year. This is not speculation. This is budgeted. This is public. This is Pentagon strategy. And the military drone market is growing at 25% a year, could go from $35 billion now to over $100 billion by 2031. So what does that mean for JFB? Three things. First, immediate need. We burned through our missiles in a real, ongoing conflict. Rebuilding takes years. Drones fill that gap. That's not theoretical. That's what's actually happening right now. We're buying drones because we don't have enough missiles. Second, the long game. The Pentagon learned something real from what happened in Iran. Cheap drones beat expensive missiles. AI-powered autonomous systems work. And that permanently changed how the military thinks about warfare. This isn't a one-year thing. It's going to drive procurement decisions for the next decade. That's a doctrine shift. And doctrine shifts mean billions in multi-year spending. Third, and this is huge, for a microcap, the Pentagon is obsessed with keeping this American-made, American-owned, not reliant on foreign supply chains. Not dependent on who's friendliest with us that year, JFB is building American drones. They're not outsourcing the manufacturing to Asia. That matters when geopolitics becomes the constraint. And then there's the XTEND merger. JFB is merging with a company called XTEND that makes AI-powered defense robotics. When that deal closes, the ticker changes to XTND and the combined company starts trading on the NASDAQ. And in the last few months, XTEND has been selected for the Pentagon's $1 billion drone dominance program. They've secured contracts in Europe and Asia Pacific. They're opening manufacturing facilities to ramp production. They're getting ready for a wave of demand they know is coming. This is the catalyst. When that merger closes, this microcap is going to get institutional attention for the first time. Right now it's unknown. Most big money doesn't know it exists. But a company that's in the Pentagon's drone strategy with a merger close coming, that's about to get discovered. And microcaps that get discovered tend to move. So why did I go all in this week? Why bet everything on two stocks that are both down double digits? Because the market got scared and panic sold both. But nothing changed about the thesis. The Pentagon's budget didn't change. The geopolitical situation didn't change. The XTEND merger timeline didn't change. The connection between UMAC and XTEND didn't change. The only thing that changed was the price. And prices on microcaps that are about to be discovered by real money tend to look really cheap in the moment right before people realize they should own them. My new position is 8,000 shares of UMAC at an average cost of about $24.50 and 6,588 shares of JFB at an average cost of about $5.40. I'm down about 8,000 on paper combined. And I'm completely out of cash. $2 left. That's the position. All in. Zero cushion. That's conviction written in portfolio moves, not words. Here's the thing. I'm not betting on drones generically. I'm betting on two specific things that work together. UMAC as a component manufacturer that's going to see increased demand when the Pentagon ramps production. And XTEND as the robotics platform that's going to drive that production, with UMAC as a strategic investor already in the deal. If the Pentagon's drone strategy plays out, both of these positions get tailwinds. If it doesn't, I lose badly. I know that going in. But I believe it will. The Pentagon is about to spend $74 billion on drones. That's happening whether I'm in it or not. As an investor, I follow capital where it flows. I believe American manufacturers like UMAC are going to benefit. I believe XTEND's merger is going to bring attention and capital to this space. And I believe the fact that UMAC is already invested in XTEND means they see the same opportunity I do. That's the move. That's the thesis. That's where we stand this week. Dumb money, smart moves. The 100K experiment continues.